Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian business confidence dropped to a near 5-year low, which in turn has reduced bullish interest for the Australian dollar pair. That said, the dollar has remained positively strong since the rebound from this bullish outside range day and so far has covered nearly 3% over the last 5 trading days. Nevertheless, the resistance at 68.80, along with the 60-day moving average seen at 68.76, should draw further bearish call and look back towards the level of 68.25. I do ascertain the market will break down further and look towards 67.60. Not a lot has happened since the long-legged doji posted in the euro, along with posting in the US dollar also. Market watchers now look ahead to the European Central Bank policy meeting scheduled for Thursday. The central bank is expected to lower rates as well as unveil a new round of quantitative easing. President Draghi will have his latest chance to cement a dovish path for monetary policy until the end of 2020. However, Draghi is facing heavy resistance from the ECB hawks on the counselling that is to increasingly be skeptical about the need for emergency action, along with that, unconventional monetary easing. Also, the ECB will meet ahead of the US Federal Reserve, which is forecast to lower interest rates this month by 25 basis points from the high of 2.25, that is, at present, to the low of 2%, which is next week. Looking at the technical period, the fact is that since the doji, that is to the dragonfly, along with the hammer, didn't last very long in either case. And from the doji here, has repeated the same pattern here in front of this trend line that comes at 110.80 to 111.15. I do anticipate a failure of many tests at this level as we've seen, and therefore look back towards the region of 110.05 to 109.35 to 55. The bulls are continually chipping away at this level of 107.55.65. The market is likely to find resistance stronger as it increases. This demand is a very small candle at this stage, and I believe the market will eventually fail towards the upside and look back towards the region that comes in at 106.85. The British pound has taken a little bit of a step back at the moment, but still focused on 125, with the parameters seen at 122.40 to 125 figure 20. Any weakness, I do find the market will find demand in front of that level of 122.40 and eventually see the rally on towards that target that I'm looking for here at 125 the figure. The level of 1,488 to 92 failed to hold overnight, and the bears crushed that level and posted a fresh low that came in at 1,484, which is a near 4-week low. As you can see here, at 78 was the spinning top, and the market did turn away from there and surged back to a high of 1,554. I'd be very concerned if we go through 78. Reason behind that, this is where I believe the foundations hold for the bullishness, and therefore a break of this level does negate my call for this year of 1,560 to 1,600. Before getting too bearish at the bottom of the range, and we've had quite a significant fall of around $70, the fact is I believe the market should increase from 78 and look up towards 95 and back to 1,500. We've got a spinning top in place for the oil, which at this stage in time questions if the market can continue on. Now, earlier overnight, President Trump said that he informed John Bolton that his services are no longer needed at the White House. Trump continued that he has disagreed strongly with many of his suggestions, as he did others in the administration. John Bolton is the US National Secretary Advisor, and therefore insists he wasn't fired but resigned. Nevertheless, from the spinning top, and some may or may not know, is a formation in a price pattern that represents a battle between the buyers and sellers, or demand and supply. A spinning top shows the indecisiveness of the market, i.e. the market participants cannot decide whether the price should rally or decline. As long as we don't go through the level of 56.20, then I'm happy to say that the market should find support there. And from 56.20, the market looks back towards the region of 58 and on to $60 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new day.